Hi Roma. It's a
Hi.
beautiful day outside today.
It's a beautiful day.
Yeah.
Such a lovely day
Um,
today.
yes. I was just thinking maybe we can talk about construction loans today.
Yes, sure.
So, because I wanted to know more in detail about it, so can
Sure.
you just elaborate?
Yeah, absolutely. So, construction loans are a little bit different from normal loans. With the construction loan, it's in two parts. One is your land, and the other one is your construction. So, with the land, what you need to do is to start with you need to see the borrowing capacity on both
Acha.
land and construction.
Mm-hmm.
So, say for example, if you're looking for a land of say
Mm-hmm.
200,000 and construction is say 150,
Mm-hmm.
so you need to do the total borrowing capacity of say 80% or 90%, whatever the
Of the
case may
total
be,
property value.
exactly, of the end value beforehand.
Oh, okay.
Because just in case if tomorrow we do the land loan first
Right.
and that settles and customer cannot borrow for the construction, then it doesn't make any
Yes,
sense, you know,
yes.
so that they can get stuck.
Yeah.
So what we do is we first do the land loan, and land will settle only after it gets registered.
Okay.
So once the land is registered, then bank can settle it. They cannot even do the valuation until the land is registered.
Okay.
That's very important. You have to remember that. Now, in terms of the construction, what you need to do is firstly, you have to, there are actually 5 parts of construction loan. Firstly, you need to find out the customer has a builder. That's number one.
Mm-hmm.
And the customer has a fixed price contract
Mm-hmm.
with the builder.
Mm-hmm.
And the builder should have an insurance. By the way, we're not talking about owner builder loans here. They're totally different. So owner builder loans, normally banks don't entertain. This is a loan, construction loan we are talking about, where a customer has a builder, like a third party builder,
Okay.
right? So what happens is that as soon as you show the fixed price tender, you show the builder's insurance and the DA approval, we can proceed with the construction loan.
Okay.
And the bank will pay direct to the builder. Bank never pays to the customer.
Okay.
So the bank will, what the bank will do is, let's say the first stage is slab. Okay, one very important thing you have to remember is, in a construction loan, the client has to pay the first deposit. The bank will not, let's say the first stage is slab, right? So the client has to pay that slab from their own pocket. If we're doing a loan for 95%, then the 5% deposit the client has to pay from their own pocket.
Okay.
And the remaining 90% the bank will pay in 5 installments to the builder.
So it's just like when the total loan you pay 5% of the land, let's say if they are doing 95%, and also 5% of construction will also have to be paid by the customer first before the construction loan will be sanctioned.
So when you say 5%, let's say the construction is worth 150,
right.
right? So 5% of that has to be paid by the client,
Okay.
right? The rest of the 95%,
Okay, I got it.
the bank has to
Okay.
pay, right?
In the same way, let's say the land was for 200,000. So the 5% of that also had to be paid by the customer.
Exactly.
And then out of whatever the value of the construction is, 5% of that will also have to be paid by the.
Same theory.
Okay.
Exactly. So in this case, with the construction loan, the bank will send a valuer out. They'll do the inspection of the property. If they're happy with that, they'll proceed to the next stage.
Okay.
And the next stage is frame. And there are 5 stages actually in total. So next stage is frame, and then after each stage, the bank will send a valuer out to the site. And once they're happy with that, they'll pay to the builder directly, not to the customer. There's an invoice the builder has to get authorized by the client, send it to us as their brokers, and then we send it to the bank. Bank then pays to the builder.
Okay.
This is how it works.
Okay, so who pays for all the valuations? You were telling me that every stage of
Yes.
construction, the valuation will be done again and again.
Yes, exactly.
So
it's actually, that's a very good question, because we as brokers, we have to find out if the bank is charging a fee on each step. Each step meaning, like, you know, first step is slab, then frame, and, you know, so on and so forth. So if the bank is charging a fee, normally it's only $50 per stage. If the bank is charging, in addition to the normal annual fee, which they
Right.
normally charge in their product, then it's up to us whether we are recommending that product to the client or not.
Okay.
So we have to choose.
So there are some banks who will absorb that cost as well.
Exactly.
Okay.
There are certain banks who don't charge that fee, but there are certain banks who will charge on each valuation. They'll charge maybe $50. So it's called construction fee.
Okay.
And the payment is called progressive payment. So you have to remember all these terms when you do construction loan.
Okay.
Progressive payment and the construction fee.
Okay. And in case of structural renovations,
Yeah.
does the same thing apply there as well?
Yeah. So let's say you're doing a top-up loan, for example, right? So with the top-up loan, what happens is that if you're going to do a construction, meaning structural renovation, that's construction.
Like adding a bathroom or
Exactly,
stuff like
adding
that.
a room or adding a bathroom or a new kitchen
Yeah,
and things
yeah.
like that. That's called structural. So for the structural loan, then exactly the same thing applies. You have to show the approval, you have to de-approval, you have to show the contract from the builder, and so on and so forth, and bank will
Release the
supply-
money
release
in
the money
stages.
in stages, exactly.
Okay. And
For-
directly to the builder.
directly to the builder.
All right.
For non-structural, it's a little bit different. For non-structural, it's bank normally releases the money, gives it to the borrower, and then the borrower can pay as they go.
Oh, okay.
So it
That's
all-
the difference.
Exactly.
Yes. Yes.
Exactly.
All right.
Yeah. So
Okay.
that's like that's a different story. Like the other day we discussed top up and for non-structural and structural. So
Okay.
that's a little bit different.
All right. Thank you.
Great.
Thanks.
Thank you.
Bye.
Thanks.